Hi everyone, thank you for tuning in. In this video, I'm going to answer the question if Domino's Pizza stock is a buy. I'm going to use my 6-step framework for analysis, so let's get right into it. The first step in my framework looks at the customer value, and Domino's offers tasty pizza and wings delivered to your home or for pickup at low prices. Domino's can arguably feed a family of four for $13, right? They've got their two medium, two topping pizza deal for $5.99. You could pick that up for six plus six, $12 plus tax. So for $13 for pickup, you can have, two pizzas, should feed a family of four. And that's a really good value. I don't know anywhere else that you can get comparatively uh, enough food to feed a family of four for $13. So good value there. Revenue has increased from 1.7 billion to 4.4 billion, more than doubled from 2012 to 2021. So based on customer behavior, it looks like they too perceive a good value from Domino's Pizza. The next step in my framework looks at unit economics, and Domino's runs on a franchise business model where franchisees pay an upfront fee, on average roughly $300,000 to open up a Domino's pizza restaurant, and then they also pay a percentage of their sales to Domino's. It's not 100% owned by franchisees. Domino's has some corporately owned stores as well, but for the most part, it's franchisee owned. And they've been experiencing robust store growth, so franchisees are noticing and realizing sufficient profits to continue opening new locations. So it's been profitable for franchisees, and so they keep getting interested in opening new stores. All right, and then using that business model, Domino's has averaged an operating profit margin of 17.5% over the last decade, and earnings per share has grown by a compound annual rate of 23%. Excellent profitability and earnings growth. The next step in my framework looks at the total addressable market, and the worldwide market for pizza alone is estimated to reach 233 billion in 2023. But Domino's doesn't only sell pizza, right? They've got wings and they've got breadsticks and some other items, but for the most part it's a pizza business, and the market for pizza is 233 billion in 2023. The next step in my framework looks at competition, and consumers have several options for pizza, right? There's no shortage of pizza restaurants, but Domino's remains one of the lowest priced and best values in the marketplace today. There's scarcely another pizza place that you can get pizzas at the price that Domino's offers and at that similar quality, right? You could think of your own region and maybe tell me in the comments down below if there is one. But in my market in Los Angeles, there's tons and tons of pizza restaurants, and there's scarcely one that offers the price to value relationship that Domino's offers. Okay, so um, the other competitive force that's rising for against Domino's is the popularity of food delivery aggregators. Think of DoorDash, Uber, Grubhub, etc. Those are expanding choices for folks who want to order food. Before these companies came to existence, if you wanted to order food to be delivered to your home, you had few choices. It had to be pizza. Maybe there were some local restaurants that were offering delivery, but not too many. Nowadays, if you want food delivered to your home, almost every restaurant in near your area, every major franchise near your area offers delivery. You can get McDonald's, Burger King, Taco Bell, Pizza Hut, so many different businesses that you can get delivery from that were not necessarily available before these food delivery aggregators came to existence. So this is certainly a troubling competitive force against Domino's going forward, because they're just getting started, right? These food delivery is a relatively young industry that only really gained momentum during the pandemic, and so we don't know how much it's going to accelerate over the next 3, 5, and 10 years. But this is threatening Domino's business. The next step in my framework considers valuation, and Domino's has consistent earnings and free cash flow, and so I use the price to earnings ratio and price to free cash flow. Looking at these metrics, Domino's is relatively inexpensive. The price to earnings of 24.6 hasn't been this low since going back before 2014. And then looking at price to free cash flow of 27.5 also hasn't been this low since going back to maybe one point in 2016 and then in 2014. So relatively inexpensive when you're looking at its own historical valuation metric. The final step in my framework considers risks, and the primary risk I note here is pizza fatigue. At the onset of the pandemic, revenue for Domino's and other pizza companies surged because we were stuck at home and we were ordering food for delivery. And so Domino's, of course, being a pizza delivery business, was almost tailor-made for that kind of scenario. So it thrived and it got so much new customers and so many new orders. And so right now, as economies are reopening, as restaurants are reopening, there's a risk that Domino's, and this is coming to fruition, Domino's growth is slowing dramatically as people are choosing to go out to eat, to go out to restaurants and dine at the restaurant instead of ordering for delivery. And so that's a near-term risk for Domino's. And secondly, I list here that labor shortages is a major risk for Domino's. It's increasing costs for franchisees, it's forcing them to operate at fewer hours, right? Some Domino's are closing at 6 or 7 p.m. because they just don't have enough staff to stay open for longer hours. They need to, shorten the amount of time they're open because they just don't have the workers. They're offering raises, bonuses, whatever they could do to try and attract these drivers to work for Domino's, but they're having difficulty attracting workers. And so this is also restricting new restaurant openings, right? Because before you can open a new restaurant, you need to make sure that you've got enough people in place to staff the restaurant. If you get orders coming in and you don't have drivers to make those deliveries, you can't run a Domino's, and so that's restricting somewhat new openings. And so this is a major risk for Domino's. They've I listen to their conference calls every quarter, and management is trying different things to try to fix this problem, including going to a third party ordering system, so when customers call, those calls get routed to another a third party service, and so folks that work at Domino's don't have to spend time answering the phone. They could spend more time making pizzas and making deliveries. But still, even using those third party services, it hasn't alleviated this problem by all that much. So we'll see if management can find a workaround, but until then, this is a major risk for Domino's. All right, now that I've looked at each step in the framework, let me give it a grade. Let me give Domino's a grade in each step of the framework. Customer value, I give Domino's an A+, right? Low cost, tasty pizzas delivered to your doorstep, or you could go and pick it up. Great value for customers, so A+. Unit economics, I gave them an A. They're not only delivering these pizzas to customers at a low price, they're also doing so in a very profitable fashion, so they get an A in this regard as well. Total addressable market, I gave them a B+. The market size of 220 billion for pizza alone is a relatively big market. There are bigger markets, and so a B+ here. Competition, I gave them a B. Even though they've done well against their traditional pizza competitors, they've been the best in class, arguably. It's uncertain how they're going to perform when the food delivery aggregators continue to gain momentum and become more mainstream. That's going to be an uncertain competitive force against Domino's, and we'll see how they evolve against that. And then finally, for risks, I gave them a B for the reasons mentioned above and earlier, the labor shortages being the primary risk here. And then moving to valuation, I gave Domino's a B. relatively inexpensive according to its historicals, but price to earnings and price to free cash flow in the mid 20s is not really that cheap. I can't say it's cheap. Apple, the innovative tech company, is trading at similar valuations, and so comparatively speaking, on an absolute basis, a valuation in the mid 20s for price to earnings, price to free cash flow is not cheap. All right, so now it's time to determine if Domino's Pizza stock is a buy right now. But before I move on to that step, this is where I like to request for the audience to subscribe, because this recommendation of whether buy, sell, or hold is not static. It doesn't stay the same over the next few weeks or the next few months. The company may find a solution to its major risk, and so that might change my recommendation from whatever it is to something even better. And so if you're subscribing to the channel, I'll probably have an update on that, changing the recommendation, and so you're going to want to tune into that information. So please subscribe. Okay, so with that being said, let's answer the question, is Domino stock a buy? No, it's not. Domino stock is a hold. So if you already own Domino stock, I would not tell you to sell it. It's a solid business, excellent earnings growth, great customer value, and it will likely find a solution to its near-term problems. However, if you're interested in buying Domino stock, it would be prudent to wait a few months and see how this labor situation evolves, to see if it improves, if Domino's can find a solution to hiring drivers, if maybe the employment situation in the US improves and more folks are willing to work at Domino's. That could be a dramatic improvement, and that would sway me to say that, okay, now is a good time to buy Domino stock. Or if the valuation falls another 10 or 15%, that could change this from the stock from a hold to a buy. So you have several catalysts that could make it a better entry point to buy Domino stock. So I would wait if you're interested in buying, but if you already own it, it's okay to hold it. No reason to sell. It's an excellent business, so just hold it. It'll probably, if you hold Domino stock from now for the next 10 years, you'll probably do well. The price will probably be higher 10 years from now than it is today. All right, so that's all I've got for Domino stock. Thank you for watching, and I'll see you next time in the next installment of Is This Stock a Buy? I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.